Hey there, it's Francis, and I'm looking at my friends at Spread Betting Magazine, a couple of the recommendations on the stocks. I've got Zak Mir's start of the week. This was his April the 13th, so it's not super mod, but not too long ago. A tale of two gulfs, looking at a couple of exploration oil type companies. My view is slightly different to his, and I just wanted to highlight a contradictory take just for its value of counter opinion. GPX is the one he's looking at, Gulf Sands Petroleum, and the larger call of it is that he called it from 80 as a buy, and it had a little pop, and it's come back down to the 80 level. He called it on a double bottom, a buy, and he's now saying almost a triple bottom, and he expects it to go to 120p recovery, and he's looking for that by the end of May. In terms of this, some of the arguments that he's making is there's been a June RSI support line, and he's drawing this on an indicator, so he's doing technical analysis on an indicator, which is pointing out and is saying that the RSI is also supported in the same manner as which there is obvious ATP support, he says. So interesting point. That's his case largely. The next, it goes on to another stock. I'd like to differ entirely and say actually I would expect this share to break down and actually to run the 50p plus level to the south side. Done some forecasting, and it could go a fair bit lower. Why do I say that? What's the technical grounds? I believe that's 33 that I've got a guesstimation on as a target. My read of the pattern is entirely different to him. First of all, let's get a bigger take. This is a daily chart, so I'm going to just zoom out, give you a bigger take. What is the trend? The underlying trend. The underlying trend here, as you're probably getting a better idea, is distinctively bearish. This did trade in excess of £4 not long ago, and there has been a sustained period on heavy volume. Note the downtrend, note the degree of volume, sell off, sell off, sell off, sell off. A lot of distribution, a lot of distribution. Also the OBV, the only other indicators that I care for which have primary data in them, they're not formulas on price data, include volume-based ones, and OBV is essentially the addition of all up days volume multiplied by the amount up. That's the weighted OBV, and on the down days, the subtraction of the day's volume from an accumulative total. This line has been trending down, 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 down. So there's been heavier sellings or more selling days as a general whole by quite some way. So the trend is clearly down. The problem we have as technical analysts and as traders as a whole is we have a desire always to want to buy at the bottom. It's a very deep-seated psychological point. Buying a recovery story seems to be like buying value. Buy low, sell high. We are automatically attracted to that, and we trade against the trend. The macro trend is down. So let's just look at this pattern that is being called as a double bottom now turned triple bottom. And this is my take over here. There is some form of support at the 80 level, of which I agree. The levels are usually just run. Here we had some support. Note the light volume here, and there was just a candle body there, and this was a hammer. There at no point was there closes at or below the ATP level at this point, and there was very low volume, and the subsequent rise was sustained and with slightly rising volume for a bit, so we had an increasing OBV that started flatlining. The value with OBV and volume is they precede. They're not some lagging indicator that is a formula on already existing price behavior. They precede potential price moves. So you start peaking out at OBV here and you reach an absolute high here. This is where it's topping. It's already trending down, and there of course we've got a complete capitulation to start with, and then we've got slightly more measured price action. Note the price level of 90 has served as support for a bit on this down leg, and the round numbers are key. They always are, because we're talking about people, and once again, difference in technical analysis. I always emphasize round levels. So we have 80 as a round level and 90 as a round level. No surprises here. Dip down, holding, holding, holding. smash down. Where do we smash to? To the 80p level. Now here we have a sustained period as a ledge with many candle bottoms, and this is a daily chart. This isn't trivial. We're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. You're talking about 19 trading days, 21.4 odd trading days in a month. So you're getting on for almost a full month trading in or at 80, which is weaker than this point and the price action here. Also, the volume has had to be a lot stronger to sustain and hold this. Then we move back up impulsively initially, and then we get to the next key level, which is also quite clear, was clear here. We broke impulsively above it, then we came back, kissed it, just ran it. The key levels are always just run because orders are clustered around there, and then broke up above it. And then once again, here we are sitting on a ledge at the top here, swiveling around it. Note how the price action, people don't look for the price action that goes in and around key levels. So we're sitting on a ledge here at a pound, and then it turns resistance and we can't hold it at, pound 10, my apologies. And then we're below it, then we're above it, then we're below it, we pivot arounding it, and then we're clearly selling off. Weak reaction at the 1 pound mark. Note that it's quite flag-like. There is no massive capitulation at this juncture, but there's a weak sell-off, then a weak support at the pound. The buyers just on there, and a very strong capitulation all the way down to the 80. At no point did we have that level of strength at the late stage that we had here. In other words, there was slowing down, there was bottoming at the 90, the support was coming in at 90. You're talking about certainly at least a month, possibly a month and a half support at 90 with a dip below and instantly support coming in at 85, pushing it back above. But then we had a sustained period sitting on the 80. So the weakness is here. The buyer who's holding this up is getting hammered. He's having to keep intervening in the market. And I'm not saying that there's one person, but I'm just saying a lot of buyers have been filled there, holding the market up here. And we're pivoting around a continuation pattern around the 1 pound level, in my view. This top couldn't hold it. Flagged, capitulation down, and the buying are coming very light volume compared to this. Very light volume, and this move up that we're having here, very light volume. We had decent-ish volume after the big battle royal that was fought here as we impulsed up. Is there the same appetite? Well, this price action is not recovery price action. That was a ledge, a flat ledge that was in a range stuck between 85 and the 80 level, just running the 80 level, just putting a tiptoe over the 85 level, but that was your 5p ledge, and you broke back up to the top side eventually. So the buyers managed to hang on and popped it on top of the 110, which they couldn't hold. They couldn't hold 100, and it spat down really quickly to here. So we're at the 80 level, and this is weak sideways action. Whenever you get a grind upwards with marginal highs, marginal lows, this is not bottoming. This is typically flag-like price action, and flag-like price action leads to a capitulation down. So where does this first flag point to? This first flag over here, if we take the last point of capitulation and the last moderate side action, we get a piece of price action to this. If we flag up to the 90p mark, which was a key price level, we can see this was a key price level that reacted. We will probably just run it, so I'll take a point just above the 90p mark, and you would get a flag price target somewhere down here. That is at 63.52. In other words, the 80 and the 75 level, 75 key as well, being 3/4 of the 1 pound mark, will fall. And that brings us into HVF theory. This gives us a full target right down to 32 and to 51.65. Now, these targets don't have to be met, but the price action is suggesting a breakdown. The price action is suggesting a breakdown, and the likelihoods for longs of being in a lot of bother. So light volume so far only as protection here. We haven't seen the buyers come in and fight off, and they haven't dissipated all that selling power. There could be plenty of that selling power there, and no support was dragged into the market. So my take is there's a chance for a 32.45. This interim over here, the second interim, will see the 50p level run. This is the previous all-time low for the data that I have. So if we go monthly on this chart, it goes back to 2005. I don't know the company that well at a fundamental level. I'm not going to pretend to. That was the low for the data I have, and that is where it was at 59. So 59 was a key low, and I see that low going to be run. Why are we getting support here? Well, you can see it was a key level of support at this point over here. The pound level, very, very key. We've pivoted around it from here, try to get away from it, pivoted around it, found support here, pivoted around it, came back, kissed it, always just run the key level, and then set off in this channel, which we then got spat out. This sell-off has been far steeper than the increase that started way back here in 2006 and took 4 years to meet its peak. In a year and a half, we were down to this level over here. Bearish for me on this particular chart. So also here you can see the distribution of the OBV and the very strong volume on the trend. Admittedly, the trend is weakening now, but I suspect a lot of the selling is has gone and the share register has changed quite a lot in this time. So were I trading this, I would look for shorts, preferably at the next key level, just past the 90 level, on a flag, providing it's in this channel type price action and taking up to this point roughly to get there. Just through the 90 level, I would look at potentially taking shorts. Speculatively for the downside to 63.52. The alternative, as my HVF traders know, is we look for and wait for the third and final high. There may be a spit out the channel to the top side first, so this may run in favor and it might bounce into the £1 level again and top out there. That'll give us our high 3. Clearly we have a secondary high here and a secondary low here, and I believe we put in a third low at the 80 level. But this price action doesn't even look like bottoming. The other thing to look at, of course, is oil itself. And if we take a look at oil, and this is my chart, this looked very much like a head and shoulders to me on a relative high. We came up, left shoulder, head, right shoulder. Classic flag, this, by the way. You can see it perfectly. There's your flag-like price action, weak upside level. So this just further endorses and probably tied in with the price action when we were around £1 on GPX. If we take this particular level and we put it down here, you can see how that target was made. Good place to get out because then it started getting choppy, and that's a decent trade. And we actually have on the head and shoulders that is in here, there's your amplitude from your high. This is the neckline I took. It's also on a 50% fib of a previous level, and it's spot on the $91 point, give or take a few pence, and it's running us down to 84.85. So this run here from 88 to 84.85 is not going to be supportive if that target is to be met. That's not an absolute. It has been slowing down, but once again, this isn't over necessarily on its bottoming move. There's been a strong impulsive sell-off here, bear flagging price action, target being made. And while this is choppy, I don't believe you can call a bottom. People invariably call bottoms too soon, and there's an outside target on a head and shoulders still to be made. So potential further downside for oil, flag-like behavior on GPX, which of course has management and its own company-related info, not just the info of the oil, but there will be a strong correlation therein. So that's my take on GPX. Beware of taking longs. We're in a HVF continuation pattern with a downside target, which could actually see you run right down to the 30p's level. We've fallen out of buy ground lines a number of times, and it's a no-go for me. This is Francis. Look forward to sharing further with you. In fact, the trade for me is at 90. Look to take shorts. I would hold for 100. The 100 might just be run, but certainly I would put a stop at the other side of 110, where you should have stopped. So 110 and 50p. You shouldn't have stops further away than that for your money management. Any sign of running relative high too, and that would mean that the prognosis put forward by Zak is the better one, and it will be to a move to the upside. But as yet, I am biasing to the short side. Thanks very much. Look forward to talking to you further, and please share.